Yeah, I know it's a little early. Let's go, sunshine. About 90 seconds. Well, that music transition was so perfect. Why don't we just start? Hey, yo, 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 welcome to Forex.Today, the YouTube community. More than 21,000 foreign exchange traders. We gather here today a little early to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's go. Bum, bum, bum. So welcome to Forex.Today, a collaboration between Traders and Traders Way, Traders Analytics, Traders Way Execution, combined perfection. Yeah, Bubba. So yeah, we're meeting a little early today. Well, that's why you subscribe, so you get the little notification. That's how life is. You gotta be adaptable. Let's get a sit rep report by Aiden. Aiden, tell us what's going on, buddy. What did we miss overnight?
Good morning, I'm Aiden. Let's get you up to speed with the current market landscape. While the broader monthly trend remains firmly risk-on, today's sentiment is notably neutral and indecisive as the session begins. I'm tracking a divergence where long-term optimism is being challenged by a 2.6 basis point rise in the U.S. 10-year yield and rising geopolitical tension, which has kept major currency pairs like EUR-USD and GBP-USD under pressure. Biggest movers right now? Brent crude oil is down. Natural gas, WTI crude oil, wheat, and corn are up.
Down.
Key insights. 1. Oil prices have climbed back above $100 as peace talks stalled, causing Indian shares to retreat. India's industrial output for March came in at 4.1%, a slight miss against the 4.2% expectation, while manufacturing output saw a sharper drop to 4.3%. Meanwhile, Spain's jobless rate has hit a one-year high, adding to Eurozone concerns. The market is now looking ahead to Australia's inflation data, which is forecast to rise to 4.5%.
4.5. Ooh, that's some inflation. Cool. Is Brent really down? I don't think that was correct. We'll take a look. Down from what, I suppose. But yeah, Brent, I think at one point was 111. So maybe it's down from 111. But we'll see what he's talking about. Okay, stock market's still going up, and today's I think today is a big earnings day, so we got to pay attention to that. VIX doing all right now. It shows VIX being up at 18.5, but remember late last week we were pushing 20, 21, so 18.5 clearly below 19 is fine, but it looks like overnight it was even better situation. So what, 17.5? Cool. So we'll keep an eye on that. Right now, up is bad. Bitcoin down and clearly below 78, 79, where we were a few days ago. So overnight down a little bit more, clearly below 77. Well, that's a bit of risk off. Gold down 1.5%. That's risk off. Oil way up. We're testing 100 again. It's either an amazing opportunity to sell or things are going to get bad. And remember, I said if WTI gets over 100, I would get on intervention watch for the Bank of Japan, which did keep interest rates as expected, which we had in our prediction market a long time ago. So anyways, oil up is bad. Yields up, that's bad. Dollar, it says up basically 0.25%, but it's below 99, or at 99, basically. Okay, yeah, I'm going to say that would be risk off if I were me. Let's get an update on our headlines.
Italy producer prices rise, most in 13 months. Oil prices rise 3% as Iran war standoff persists. Spain retail sales growth accelerates to 4-month high.
Morning bid, Talons on show.
FTSE rises nearly 0.5%. Energy stocks move up sharply.
Euro US dollar holds losses below 1.1700, with ECB and Fed coming into focus.
US Energy Secretary Wright. Trump is focused on getting right deal with Iran. Bitcoin price forecast. BTC corrects as ETF outflows and continued US-Iran uncertainty weigh on sentiment.
And we track that in our COT report, huh? The inflows and outflows into crypto. Yeah, we track that. Later today, we got Conference Board Consumer Confidence. All right. That's part of the leading indicator anyways. All right, so did you answer the poll? Risk on, risk off. Very risk on, very risk off. We're actually not asking you what you think. It's the question really is, what do you think the market thinks? Right now, well, today, nothing's going on. Like, as of right this second, nothing's going on. But we're generally risk on over the last week and month. Balance it all out and wait it all out. And, we're, yeah. That's it. We're just neutral to risk on, so risk on. Yeah, I'd be risk on. I can't be neutral, so I have to choose risk on or risk off. So I'm going to, because I'm throwing in medium and long term, That's how we get an overall score, an aggregate score of 7.77. Having looked at dozens of variables, all individually weighted, and then weighted each, again weighted over time frames. Yeah, it's a pretty sophisticated analysis, but bottom line is, yeah, I guess we're risk on. It may not happen today. Maybe we're waiting for the Fed meeting tomorrow. Who knows? All we know is we're reading everything, and we know exactly what the entire market is doing, and we can align ourselves with it. So it answers that question pretty definitively versus just kind of trading along, doing what you always do. So if you answered risk on, okay. H2 producer says, H2O producer says, hey, Aiden sounds like he has a British accent. Well, when it comes to the headline radars, that was one of the first things I built quite a while ago now. And I have voices that read the news that sort of pass the microphone throughout the day, depending on time zone. So if we're still in sort of European trading hours, which we still kind of are, it's London lunch-ish right now, you'll get that accent. By the time we hand over to New York, my voice will be one of the voices, right? What do I think about USD yen? All right. We're a snowball question. What do I think about it? Okay, this is what I think. That's what I think. Right now, we are not eager to break 160. I think we are on central bank intervention if oil goes up above 100, which we've already covered a million times. I think GDP favors the United States, inflation favors Japan, unemployment favors Japan, interest rates favor the United States. We gave it a score of 2.33. Commitment of Traders report shows money favoring the U.S. dollar. Seasonality favors the U.S. dollar. Trend is flat and neutral. Momentum is flat and neutral. The index shows flat and flat, both dollar and yen. But seasonally, April is up, May is up, and June is up, favoring the U.S. dollar over the Japanese yen. Institutional investors are slightly bullish, and retail is is neutral. That's what I think. What do you think? So I give it a score of 2.33. What do you think of that? Hey, Tay? What do I think? That's what I think. I have all the data from every angle: short, medium, long-term, statistical analysis, technical analysis, eco-analysis, institutional analysis, seasonal analysis. That's what I think. Okay. Now, Big Perm says, hey, I suspect most investors are cautious at the 160 level because of intervention. Yes, which we've been talking about for 2 or 3 weeks, but you still need the catalyst. Why would the central bank do it? Trust me, they're not sitting around hoping and wishing they can do it. So we need the catalyst. And so what you're missing on that point of view is WTI clearly above 100. And we're at 100 right now. So yeah. Yeah, so I would pay attention, but I wouldn't front run it. Okay? But anyways, I wanted to answer that question. What do I think? I know. I don't have to waste brain power thinking. I know. So, what do I want to trade right now? What do I know? Aussie Swiss franc is your best trade. Kiwi Swiss franc is your second best trade. Done. Done. Just done. You see? If it takes you longer than a couple of seconds to figure out what to do right now, you're not doing it right. So like that, very often a question like, what do you think about USD yen? It's like, well, you're trying to decide whether you want to trade it. That's a really dumb trade. Based on everything that's happening right this second, looking at dozens and dozens and dozens and dozens of charts. I can tell you, what do I think about it? Well, USD yen up slightly, right? We're bullish. There's no doubt, but that's long-term economics. But also, I'm looking at seasonality. It usually goes up. All these things, right? So we know up. There's no debate, right, Tate? But the second thing is, if you're asking me, should I be trading it right now? No, dude, that's a dumb trade. What are you talking about, bro? USD is neutral. It's not doing anything. Yen is slightly bearish, but not, it'll go up a little bit, but are we going to break 160? Dude, it's barely doing anything, and you're not looking at Aussie Swiss franc? Bro. Or pound Aussie? Really? You're not looking at that? You're looking at something that's not moving. Why? Well, it's not because you're dumb, it's because you don't know. So I just solved that problem. Just like that. So it's not so if you're struggling with, getting the results you expect, it's probably not your technique, your skill level for entering technical analysis. You're just trading the wrong asset at this particular moment in time. Right? So Aussie Swiss franc, Kiwi Swiss franc, CAD Swiss franc, USD Swiss franc. These are just like all obvious. 74, 63, 59. So let's just say you would start with these three long. 46 is barely, so that's kind of a pass, but pound Aussie is about the same as USD Swiss franc. So you could pick your pair, it wouldn't matter. But your USD yen that you're asking me about, it's a 0.09, and you're giving up a 7.4 for a 0.1? This is 7.5 times better. Right this second, right now. Now, this took us 14 calculations to get you this. And this took 14 calculations. And this took 14 calculations. So we do it automatically for you, huh? Follow the bouncing ball, says Big Perm, but I'm worried about 100, right? So you're worried about 160 on intervention with the yen. What about $100 on WTI, huh? This coming up later today. Cool, right? Looks like it's going to be worth Euro Aussie 48 pips is your best opportunity. I just love how it's got the same pair twice and they disagree. Well, I guess 0.1 pips. All right, so obviously I'm burning money here duplicating all the analysis. Uh-oh. Aussie yen. Uh-oh. Gonna have to yell at 8, and all this costs me money. Oh, look, duplicate analysis of everything. But anyways, at least we got the analysis, and it's glowing because it's good. Okay. So that's way out tonight. Don't forget that we have our conference board before that. Okay. Not a big mover though. Oh, whoa. Cool. Well, he's trying. He's got to get his modal to fit a little bit better. Ooh, look at that nosedive. Is that right? Wow. Interesting. So we got a little bit of work to do on this, but at least we have the data. Cool. So what's going on in the world? Well, we believe Swissy is the best thing to be selling right now. Okay. It's nice to have that knowledge, right? So, for example, if you already knew Swissy was the weakest funding pair, you could just go here. And we got bullish. Okay. So pound is weak and yen is weak. Cool. It's nice, right? Do you remember which one you want to trade? Just go back. Aussie and Kiwi versus Swissy. Okay. Aussie and Kiwi. Go! Maybe it needs to load. Load. Okay. And that's the dip that you want to buy, you see? You want to see that. Aha! We're becoming one standard deviation below the mean. So you want to look for other levels of support. Okay. So you can zoom in there, find other levels of support. Maybe it's a roll reversal here. Like, let me, oh, my drawing tool doesn't work. All right. Anyways, right in here, maybe a roll reversal, but look for your daily pivots, look for moving averages, look at the higher time frames. But the most important thing is to be a bull, and you love the fact that it's red because you're trying to buy a higher low. Now, maybe it collapses. Yeah, well, it ain't collapsing now, and we know that. Okay? All right, so I'll leave that for you to figure out. Nat gas way up, oil way up, NASI's doing well. You know what? I have Aiden open now. Okay. I keep forgetting to tell him about that. Platinum down, silver down, Nikkei down, copper down, Bitcoin down, gold down. Okay, that's risk off. So I just told him about this. Okay, earnings. What do you think about earnings? Yeah. Earnings coming out. Looks like lots of Aussies to the upside. Lots of, right? Kiwi to the upside. Kiwi. Maybe even some kitty cat, huh? CAD. So you know that the indice radar here, the index radar, is essentially reading our contrarian radar to get its data to tell you, hey, bro, did you know all the Aussie pairs are up right now? Did you know all the Swissy pairs are up right now? Like Euro Swissy up, Pound Swissy up, Aussie Swissy up, Kiwi Swissy up, CAD Swissy up, USD Swissy up. hey, right? Maybe Swissy's weak. Look at Swissy yen down. Hey, maybe Swissy's weak. Good to know, right? Yes. So that's why we have tools reading tools. Ah! All right, hang on. I refreshed and locked myself out. Okay, it's all right. These things happen. Got my code. Don't worry, you can't steal my code. It only works for me and it only works once. It's a burner code. Nice. Good system though. All right. You didn't fix it. Oh, maybe I didn't publish. I want this to move and be green or red. Roll in, roll in, roll in. All right. So, anyways, let's go out to the commodities. Yeah, interesting. Oil up, and I believe these the soybean, corn, and wheat would be up as well. So let me take a screenshot of that. Have Aiden work on that for us as well. We have the data for soybean, so I'm just not sure. And corn and wheat, I'm just not sure why he's not pulling it. So I'll get him working on that. Cool. It's kind of nice, isn't it? Yeah. Bitcoin down, Ethereum down, not by a lot. 0.6 is not a big deal for crypto, but it's not risk on. And so, even though it's not a big deal, it still adds up. Yup. We were showing this like in the headline news. It talked about flows out of crypto, and that's what this is. In particular, this. Now, money went into ETH, but out of Bitcoin. But in general, this is what that news article that Aiden read to us. This is like the market, the flows is money going into ETFs or out of ETFs? Is it going in that trade these things, or is money going into futures or out? Speculative, right? And in this case, still out. They're still net short. Good to know. I know. Yeah, so one of the things I was thinking about doing is adding PMI to this. That might be one of the things on my to-do list coming up. And I think what I've decided, what I think is maybe only include composite, but I have to double check that composite is easy to get for all of them versus manufacturing and services. Do we want to compare the manufacturing sectors of all the economies? I'm like, well, Japan versus Germany, maybe, but you know, do we care that much? Do we want to compare services? Or like, yeah, just give me a number. Is the overall economy contracting or expanding? And I'm like, that's where I just give me the composite. So that's what I'm thinking of doing it. But well, PMI is not a government agency, is it? So I have to see if I can get that legally, of course. There's a lot of suspect services out there that just scrape it off the internet. I don't like stealing. In fact, I hate stealing. I hate thieves. So I legally and ethically access the data. We'll see. So intervention watch, I suppose what we would want to do is pay attention from a swing level, I think. And we're not quite there, but notice we're up at 160 and we do not have the trends in place that the other currencies have. So one of the important things to look at is the linear projection. This is tight and up. This is tight and up. This is flat and wide. That tells us bulls and bears are in this market. So we have no trend and lots of volatility. How does that smell? Wait, it's going nowhere and there's lots of volatility? Yeah. So it drops fast, it rises fast, and and so the best bulls might make money buying a dip. The best bears might make money selling the rip, but retail traders get caught in between and get run over. They're in nomad's land. Yeah, so again, I apologize for starting early today. I have some charitable work to do this morning, and for some reason they want to do it early. I'm like, early? Don't you guys have jobs? So anyway, I got to do some charitable work, and I think I got one or two events next week that may or may not get in the way. We'll see. But I can certainly bring my laptop and do something from somewhere, hopefully, right? But this morning, yeah, I have to jump a little bit early and then get back. I think I can get back in time for the market, but might have to work at my other office. But anyways, thank you. And this is why you subscribe, so you get the little ding-a-ling that we started earlier. But yeah, so should we watch Japanese yen at 160? Well, what I said last week is watch it at 160 if oil, WTI specifically, is at 100. Holy schnicker. We're at 100. Yeah. Should we worry? Yeah. Yep. Should we worry? Yeah. So I don't think if I were me, I would put on a bunch of long yen trades. I don't think the Bank of Japan would intervene at specifically 160. But I think they would want to enter sort of when everyone is paying attention to the Fed, which is tomorrow. And then, They're like, hey, look over here. And then all of a sudden they're buying yen, right? Which means yen pairs down. So look over here, whack you over the head and take your wallet, right? So two things I'd like to share about that. It would happen fast, probably faster than you can move. The second thing is intervention never works. So it might work for a day, it might work for a week, it might only work for an hour. So you got to be aggressive on your entry, but conservative with your stops. So like if you jump into intervention, don't take a 300 pip loss because you're like, it has to fall. No, dude. No. But if you're going to take the trade, you got to be Johnny on the spot. You got to be quick. It's a scalp, bro. Now, if you're lucky, your scalp makes you 300 pips. But do not ever put yourself in a situation where you take a 300 pip loss on intervention. That's just poor trading. You're a degenerate gambler at that point, and you're reacting. You can get through your entire Forex trading career without ever trading intervention. It'd be okay. What's not okay is a bloodbath loss. So think about it. You don't actually need it. This is when I did my business planning retreat back in 2005. I did the 3-year performa cash flow statement for my trading business. And I discovered I never needed a big win. I don't need to win big to succeed. I don't need home runs. I don't need grand slams. I don't need high flying, death defying 360 slam dunks. I need consistency. I need just getting on first base, getting on second base, that kind of stuff. Run it down the middle, right? Win Super Bowl 5 yards at a time. As long as you are steady and low risk, you will succeed. So that's the cool thing where like you don't need intervention. So don't get excited like, oh my God, the yens are going to move 400 pips in 8 minutes. I'm going to get rich. That's a poor way of thinking. Okay. It's poverty. It's a get rich mindset. And let me tell you, that's not how the world works. A dog and pony show is not a career. But you can take advantage of it. You can be opportunistic. But a bloodbath loss could ruin your career. If you made a couple of hundred pips, why would that change anything? Really? Is that a lot? Huh? Like you think 100 pip win is a bragging right? Really? No, we call that a boring swing trade. If you're excited about triple digits, dude, really? Yeah, I remember talking to somebody, and this is now poking fun at myself. We were in a business deal, and I said, dude, there's no way I want to consider this unless there's $1 million in it for me. And he looked at me and he laughed, and he's like, that's it? Really? And I'm like, well, it's a good start. Like, really? That's it? So, same thing, like, if you're like, oh my God, well, I can make 100 pips, you're like, dude, you're supposed to be making 100 pips all the time. Like every trade you take should be worth 100 pips, right? So anyways, just keep it all lined up. So let me repeat myself in case I babble too much. You don't need to make a lot of money on the Japanese yen intervention if it indeed occurs. You don't need the big win because you make so many consistent trades with so little risk that at the end of the month, at the end of the quarter, at the end of the year, in 2 years and 3 years, you're going to hit your financial goals. You already know that. You don't need the big win. What would it change? You get there 100. I mean, look, let's say you got to make 100,000 pips. 100 pips barely moves the needle. What you need is lots of decent trades over and over and over and over again. So what's the big win? You feel like a hero? That's not what you should be trading for. Nobody cares. What do people care about, in particular investors, if you're trading other people's money? A big loss. So I would argue you have far more to lose than you do to gain. Because if you have reliable, repeatable trades, you're going to hit your financial goals with a good Sharpe ratio, which means you don't have a lot of volatility. Yeah, you don't win all your trades, but your losers are small, your winners are bigger, and you just chug along, right? Chug along. But ups and downs, big wins are actually not good, but big losses are career ending. You can't go to a millionaire or billionaire and say, I want to trade your money. I'm a Forex trader and I make 150% a year. And then they look at your drawdowns of 40, 50, 60% drawdowns. Pass. Yeah, pass. Even a 20% drawdown, that is maybe not career ending, but over the next 5 years, because you have to keep it on your track record for 5 years, every time you sit down with a potential investor, they're going to bring it up, and it's going to be a problem. Does that mean you can lose 20% of my money? Right? Oh my God, that would be such and such. I don't know, blah, 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 right? So, trader be warned. So, intervention, yeah, oil up at now 101, that's going to be a problem. Yen getting strong, yep, but see, I already set this up yesterday. That was a good one. I don't have the dollar up here. I guess we will do this one. Yeah. Okay. Gotta watch it. Now, with risk off, the dollar gets strong. So how do you do it then? How do you do it? Oh, I wish I knew what to do. I wish I had deep data. I wish I had big data that was real time. Okay. Yen isn't crazy strong, but it is getting a little bit stronger. So here's what you do. You ready? We are going to have to change. Let's go back to the yens. And I am going to change. So we know Aussie is the strongest. Now, look, that's why I got my stop at break even. But check this out. We also up at a profit taking anyways. But let me change this because I want you to see. Boom, shalakalaka. That's probably what you're going to do, huh? Now, also keep your eye on the Swiss franc just in case we have across the board risk off, which means dollar strong, Swissy strong, and yen strong. But right now, Swissy's weak. And since you're scalping, you don't want to be on a daily. So let's go out to a fiver. And are you trading the market or are you just scalping? Okay, you may not even need those moving averages. Or you can zoom out or switch up the template and go price action, zero lag. I'm going to double check. Sometimes I change the zero lag 21. No, that's right. Cool. And so now we're below the zero lag 21. USD yen is at 160. WTI at 101. Do you have permission to short this and look for Japanese yen strength? Well, if I were me, I would have both these open at the same time. And you want to see this spike. No, it'd be this way. Spike. It would turn hardcore green and go up. Okay? But you just happen to be trading yen that's not strong in the moment. Maybe it's about to turn strong. But we do know Swissy is weak. You see? So at least you got half the equation. Okay? So good luck.